The Sunday evening, in a sense, was very exciting. But looking at the market setup, the Monday morning may not be all that exciting. So where do we stand right now? Let's look at the global setup. And in terms of the global setup, in terms of the market setup, the week gone by, in a sense, India did okay. World was shaking. The Friday handover from US markets was not scary, but was not encouraging. So up until now, emerging markets have been under pressure. US markets and developed markets have been holding on. For the first time, we've seen cracks in the US markets also last week, and that in a sense is something can really India evade through. That's the setup or setting on the table in terms of the global setup. For the week gone by, Nasdaq was down 2.5%, Nifty was down 0.5%, and small cap and mid cap stocks, a mild outperformance, but an encouraging one nevertheless, especially considering the data what we got on Wednesday and Thursday, and very mild little follow-up on Friday. So if you look at the market from the prism of what we saw last week, well, there was some encouragement, but that surely will get challenged looking at the technical setup this morning.
Oh yeah, absolutely. And I think the key talking point is the fact that we finally breached the 22,800 mark. Remember, we defended 22,750 for the last 8 sessions when we did get close to breaching 22,800. And this has happened for the first time since June 2024. We're down a good 13% now on the Nifty alone from the 52-week peaks. All indexes except the Nifty Metal closed in the red. Auto index, in fact, was the worst performer. And you know, just the internals, Nikunj, right now, they are the ones which are not giving you comfort at all on how much more pain is there on the screen, because this is a big psychological barrier, 22,800.
So Aisha, since markets have found multiple support points, you know, double bottom, triple bottom, penta bottom, all terms have been used, that in a sense got tested. If markets would have had a good global handover, then you would have said, okay, you know, just closer to that level, markets were able to bounce back. Now, in terms of a meaningful change in the short term, well, I would say it surely will induce volatility. Since a lot of HNI and retail positioning has been centered around this level, a gap down start today will only accelerate the fall. I will not be surprised that the good work which has happened in mid and small cap stocks on Wednesday and Thursday and little follow up on Friday, that will get challenged. So earlier this week, at least next to today for sure, we will have to deal with a gap down start and the accompanying selling which will come with it. If globally things do not improve, then we are likely to get pushed back, and then that could lead to further price erosion in mid and small cap stocks. So I'm connecting if the technical setup and the mood of the market. The technical setup is weak, the mood globally is not great, and it could lead to some more compulsive unwinding in the small and the mid cap space, which is what I worry about. I think you'll have to brace yourself to downside at least for next few days. The out of jail card would be that globally things become better, you find support after today's early morning selling and Nifty regains 22,800. But that looks highly unlikely. In the condition that you stay below that, then we could see more collateral damage coming in small and mid cap stocks. So it's going to be a tough Monday.
Yeah, absolutely. Because, you know, just now, have you seen slight bit of outperformance or at least stability come in from the small and mid caps? Is that going to be undone? That's the big question. Whether or not Nifty will manage to hold on to key levels, resurrect back above the 22,800 mark, that's a key determinant. And yeah, is it time now to eye the tariff hit stocks? The weakness that you're seeing in autos, is time to start nibbling in over there at all? But, you know, just looking at the context, Nikunj, and the positives and the negatives here, the fact that the dollar strength seems to be waning off a little bit, FI selling, it's at least measured, so to speak, and yeah, DI support clearly continues, and there's short covering in FNO as well, start off, you know, as we approach closer to the end of the series. The negatives, of course, you know, continue to be US markets and macros and, you know, Trump rhetoric, which is a shocker every morning that we walk into work.
So let's look at a realistic possibility. you've gone below key technical level. What happens because of that? I think that'll lead to some technical weakness, and a lot of hand-on art traders would sell. The institutional investors are not going to sell because you've gone below key technical level. Institutional investor would look and say that, okay, where is the earning, where is the EPS, and where things are moving in terms of valuations and the global macro setup. So I think you are in a situation where technically things are looking bad, but fundamentally things have started improving on the margin, both in terms of the global macro and also in terms of the dollar and the crude interplay, and then in terms of the underlying valuations and the kind of earnings promise we have. So I definitely expect that once the technical selling settles, which it may settle today, which may settle tomorrow, once the entire selling in small and mid cap stocks is over because of this technical breakdown, then I think institutional investors would start nibbling back again. Just because the key technical level has been broken, I don't think you should go outright bearish. You'll have to deal with the market forces, and at low level, I think it is time to start buying into good large cap stocks and some decent mid cap stocks, because it's not bad, it's not terrible. On the margin, if you take a deep breath, which is what you should do when you see something like this, and say, where is the problem? Problem was valuations, problem was global macro, and problem was earning. Everyone knows that earnings are contracting and they will get better. Valuations were bloated up, but they're getting better. And then there is the global setup in terms of tariff and where the entire tariff war would move. That no one knows. I don't think even US President Donald Trump knows that what the final picture would be. There's a lot of yes, no, I will give you this if you don't give me that. I think there is a lot of negotiation tactics which have been used. Can anybody convincingly say that what would the final picture look like on 1st of April when it will be released? By the way, it's April Fool's Day.
Yeah. So I hope he's playing that.
It's April Fool's Day. I don't know why. Yeah. So are we in for some surprise on April Fool's Day, or are we in for some nasty, tariffs? Nobody knows. So we have to deal with it.
Yep, we'll only figure out in the hindsight. But Warren Buffett, his latest shareholder letter, and that seems to be, the big talking point all through the weekend. The letter is now reaffirming his faith in stocks over cash. Having said that, Berkshire Hathaway's cash reserves have now soared to $334 billion. He praised Greg Abel as his successor, calling him ready to lead. Berkshire also reported over $47 billion in operating earnings for 2024, driven by gains in investment income and, of course, strong insurance business, despite over half of its 189 companies seeing an earnings drop. Buffett also revealed a shift in portfolio strategy, reducing stakes in Apple and banks while increasing investment in Constellation Brands, SiriusXM, and Occidental Petroleum. With limited buying opportunities in the US, he says one key takeaway is that Berkshire Hathaway is looking for opportunities overseas. The company has been increasing investments in the likes of Japanese companies like Itochu, Marubeni, Mitsubishi, Mitsui, and of course Sumitomo as well. So, yeah, the bullishness in Japan, the cash reserves, and we have a new CEO.
Okay, Warren Buffett newsletter is of immense importance because markets pretty much want to understand that where he's turning and what his opinion in general about the market and about the world is. Now, investors, they like to coattail Warren Buffett in terms of whatever move he's doing, and especially in the equity market, because his ability to find hidden gems is something which markets really love to discover. Buffett has never been a macro caller. Buffett has always said that, when I invest in a company, I don't look at macros. But in this case, Buffett is not investing in equities. The fact that him and his fellow fund managers or his team right now is raising cash on every uptick, it clearly means that either he thinks that there is discomfort in the underlying market or he's not finding large opportunities. The cash levels are at a level where you would say that it clearly means that, Buffett, who never likes to keep money in cash or bond because they are unproductive in a longer term, why is he doing that? So is he taking a view on the market, or is he not finding too many opportunities? Now, frankly, to take a view based on what Warren Buffett is doing and say that, okay, Berkshire Hathaway is raising cash, so I should raise cash, I'm referring to our audience here, I think may not be the best strategy. Because what Berkshire Hathaway is doing could be their compulsion, their ability to invest, size is what they're hunting at, and then they have a different investment process which goes through. So please don't do the mistake of assuming that Warren Buffett has given a profit warning about equity market and he's raising cash and you should cancel your SIPs and you should go independently against it. He's managing billions of dollars. His approach and time frame is different. His style is very different. It's just that at that large size, they are not been able to find too much of opportunity, which they are hunting for, and they're finding right now in Japan. And there is specific mention in terms of whether US macro should move, what will happen to the bond market, but nothing really beyond that. I wouldn't say that markets are surprised or shocked with the cash levels, because he's been mentioning that at Berkshire Hathaway, the way we invest, we are not finding value. And that's the message I think we should take out for our viewers, that just because Buffett is raising cash does not mean that you start raising cash here. I used to earlier part, when we all started understanding market, we used to always think that that is the ultimate Bible of investing. Just coattail whatever Buffett does. But his size, his time horizon, everything is different. Age. He's not excepting Apple, he's not made any large bets. So, I used to be, somebody asked me on Sunday morning, in the gym, that, Buffett's raised cash, should I cancel that? I said, that's Buffett. Please don't do that. Your time horizon, India, valuation, everything is different. So just because the most famous investor in the world is raising cash, it does not mean that applies to you also.